Good day, subscribers. Thank you so much for joining me today. I am Jeremy. This is the Financial Education Channel, and today we're going to take a look at Lululemon stock, a Canadian company. I had one of my Canadian viewers this past week suggest that I do something like Canadian stock related for the Canadian viewers, and I was like, I don't think I've ever done something like that before, and you Canadians represent on the channel. You're the second biggest market for my channel, so I figured, why not? Why not do it? And I happen to be looking at Lululemon at the same exact time, which is a Canadian company, so I'm like, why not do a video about my favorite Canadian company at the moment, which is Lululemon, guys. So we're going to look at this one. We're going to see kind of why I'm looking into this one. I'm not invested in it yet, but I'm seriously looking into it, and I kind of like what they got going on. So the first off, we're looking into Lululemon because they caught my eye last week because their stock dropped like a rock. Their stock dropped like over 20% this past week. I saw that on I think CNBC and some other publications and whatnot, and I think I even covered it in my stock market recap video. So I was like, I gotta look into this one. I gotta look into it and see what's going on over there. And found a company I kind of like. So for those of you guys who do not know what Lululemon is, I'm on their 10K. I'm in their annual report 10K, which is on their investor relations page. And this basically talks about their business. Our healthy lifestyle-inspired athletic apparel is marketed under the Lululemon and Ivivva brand names. We offer a comprehensive line of apparel and accessories for women, men now, and female youth. Our apparel assortment includes items such as pants, shorts, tops, jackets designed for healthy lifestyle and athletic activities such as yoga, running, training, and most other sweaty pursuits. So Lululemon started out as basically just a yoga pant company. That's like their thing. That was their thing. They just started out as yoga pants basically, and they kind of like helped start the whole trend of like yoga pants, and now all of a sudden like everybody wears like or not everybody, but like a lot of women and girls even wear like these super tight yoga pants, and they kind of helped start that whole trend. But their business has evolved now, and now they don't just sell pants. They sell, tops, they sell jackets, they sell even some men's clothes now. So they're diversifying their business off of, they started in a niche, which every single athletic company that's ever been successful starts in a niche and then starts to brand its way out. If you followed Under Armour in the early days, what their niche was basically for football players, baseball players and stuff. Like I remember in high school, Under Armour was kind of coming around and whatnot, and like you were a cool guy if you had like the Under Armour shirt and whatnot that was like super tight and it like somehow took moisture away from your body and stuff like that. Like that's how Under Armour started. Nike, they started as basically a track shoe, for running and whatnot. And now look at their global brand, one of the biggest in the world. So a lot of athletic companies have started just in a niche, and then they branch out, and that's where Lululemon's just starting to branch out now. So when I look at Lululemon here, this is a company-operated stores. I'm still on their annual report, which is on their investor relations page, and I see that they're big in the United States, and it's still not that big. I mean, 245 stores is not a lot. And then they have 51 stores in Canada, 27 stores in Australia, and virtually almost non-existent in Europe, almost non-existent in Asia. So I look at that and I say, okay, this company definitely has room to expand in the U.S. They definitely have a massive amount of room to expand in Europe. They have barely even gotten going there. They have massive amount of room to expand in the Asian countries. So right now, I'm looking at this and I see a company that 5 to 10 years from now, as long as they can manage the brand well, they can definitely build out this company way, way, way bigger than it is. I mean, look at, they have 3 stores in Hong Kong and 3 stores in China. Like they're non-existent basically in Asia right now. So they're just trying to get their US built up. And I agree with that. You got to get the US built first because that's where, I mean, they're a Canadian company, but they're still a North American company in the end. You got to get the US built up, get more of a brand name here, and then expand more into Europe, then expand more into China last, and Asia in general when you got your big brand name, and it's kind of more of a global story at that point. So I look at that and they got a lot of growth ahead of them as long as they can manage a brand properly. Now, let's talk about some competition here. So competition in the athletic apparel industry is principally on the basis of brand image and recognition, as well as product quality, innovation, style, distribution, price. So they got a lot of competitors. We go down to the next paragraph. We are in direct competition with wholesalers and direct sellers of athletic apparel such as Nike, Adidas, Under Armour. They even compete a little bit with The Gap, who has an Athletica brand, it's called. They compete a little bit with L Brands, who owns Victoria's Secret, because Victoria's Secret and Pink, they try to do some things like that. So it's a very competitive space there, and they got a lot of indirect competitors, and they got a lot of direct competitors, and then you got a lot of knockoff products now. I mean, yoga pants, and those tights and stuff, you can get those at Walmart and Target now. Like, it used to be like you had to go to one of these higher end stores. Now you can get it, it's like a dime a dozen. Of course, their quality, I'm sure, is much different, and that's something I still got to look into. I got to actually visit these stores and talk to people that are, customers of Lululemon. Why do they like it and things like that? I still got to do all that. But I'm sure their quality is better than a Walmart one or a Target one, things like that. And that's why they deserve a higher price. And I'm sure they're more stylish and things like that. So a lot of competition, though. We cannot deny that. And, a stock like Under Armour has been beaten down to a pulp so far this year. So this stock is not the only stock that's down pretty big so far this year as far as in the space. Now, we look at their last 3 years of revenue, which I love to look at when I'm looking into a company, 2015, 2016, 2017. Check out this. So they were just around $1.8 billion in revenue they did in 2015. Then they did $2 billion in 2016. And this past year, the quarter ended January 2017, they did $2.3 billion. So it's not like, blow me away type growth, but it certainly is nice growth. And then we look at net income's grown very nice, $239 million, the quarter ended 2015, or the year ended 2015, then 2016, $266 million. This past year they did $303, so there's nice growth. I mean, you look at this company and it's growing nicely. It's not a gangbuster growth like knock me out type thing, but revenue is growing nice and net income's growing phenomenally. And this company made over $300 million profit last year. It's very, very impressive for this company. So now we look at this balance sheet. Holy smokes, what a great balance sheet. This is my type of balance sheet right here. They have $734 million in cash, right? And they basically have no debt. Their debt is non-existent. So they got $750 million in cash just sitting around. That's my type of balance sheet. This is a company that's very safe to invest in, because even if they come upon some hard times, they're loaded up with cash like an insane amount, guys. So very happy to see that. It's very good, and that definitely gives them a lot of cash to help expand this business around the United States and then over into Europe and then more into Asia and things like that, guys. And maybe do some commercials, advertising. They got plenty of money around. They're plenty profitable. They made over $300 million last year. So now let's look at this quarter, which is why their stock dropped like a rock the other day. So this quarter wasn't that bad. And I mean, net revenues increased 12%. To $789 million from $704 million the previous year. Total comparable store sales, which included comparable store sales and direct-to-consumer, increased 8% or 7% on a constant dollar basis. That's very impressive, guys. And 8%, that's, anybody that knows anything about retail, that's a high number. And then we look at, direct-to-consumer net revenue increased 12%. Gross profit increased 21% to $427 million. Man, income from operations increased 18%. Just a lot of very impressive stuff. Diluted earnings per share were 99 cents compared to 85 cents the previous year. Just impressive after impressive numbers. But where the quarter kind of came into question was the 2017 outlook, but specifically the Q1 outlook, which was kind of poorish here, guys. So for the first quarter fiscal 2017, we expect net revenues to be in the $510 million to $515 million range based upon total comparable store sales decrease in the low single digits on a constant dollar basis. Diluted earnings per share are expected to be 25 to 27 cents. Blah, blah, blah. So basically, and then for full fiscal 2017, we expect net revenues to be in the range of $2.55 to $2.6 billion on total comparable store sales increase in the low single digits. So for the whole year, they're expecting the growth certainly to slow. But Q1, actually, they're expecting bad, like negative growth. They're expecting comparable store sales to be down just a little bit, guys. So it kind of goes from a company that's growing revenues at like a 12% clip to now maybe growing at a 1 to maybe a 3% clip, because they said low single digits are expecting growth for 2017. So that means 1, 2, or 3%. So a big slowdown in growth, and that's why that stock got hammered this week. But at the same time, you know, it's a good company. It's very profitable still. So let's look at some metrics here. The market cap on this company is around $6.82 billion. They have about $750 million in cash. So basically that makes the market cap around a $6 billion market cap if you subtract the cash from the market cap. And they got a trailing PE of 24, a forward PE of just under 19. So I look at this stock and I like it a lot. I'm not investing in it yet, but it definitely has my attention. What I'm going to do now is I'm going to actually go literally to some stores. I'm going to try to see some customer reviews. I'm going to try to see some product reviews. I'm going to try to watch some user behavior and find some people that actually wear Lululemon clothes and things like that, and see why they're passionate around the brand, why they like those clothes the best, you know, things like that. I'm going to try to really deep dive research things that just aren't on the financial metrics. I mean, you can only get so much as an investor from looking at the metrics, right? Right now, I'm like, I'm very excited about this, but I gotta do more research. I gotta do more research into this company that doesn't have to do anything with numbers. More like feelings, more like actually talking to customers, things like that, guys. Actually visiting stores, actually seeing the product quality, product pricing, because I don't even have a clue what their yoga pants are priced at. They could be priced at $800. They could be priced at $80. I don't know. So I gotta look into all that stuff, guys. But right now, it definitely has my attention. It's definitely my favorite Canadian stock at the moment. And whether I'll be buying it, we'll just have to see in the future, guys. So I hope you enjoyed this today. Hit a thumbs up button if you enjoyed. Let me know in that comment section if there's any specific stock you guys would love to see broken down. And if someone suggests a stock that on there and you like that same stock, you can just leave that comment a thumbs up, whatever one they suggest, guys. So anyways, I hope you enjoyed this today. If you just came across the channel, you may want to subscribe. We talk personal finance, we talk entrepreneurship, we talk the stock market the most of anything. Thank you for watching, guys, and have a great day.